What's going on, everybody? This is the blockchain backer, bringing you the latest cryptocurrency news and analysis. Today, we're taking a look over here at the Bitcoin price chart, but we're also going to look over at the altcoin market. We're going to take a look at the Xrp price chart and talk about Xrp and Ripple. Yesterday was a big day because the Federal Reserve approved a 0.25 percentage point rate hike, which is the first time since 2018. The stock market was very nervous of that yesterday. However, it did close up green. We actually had a rally the day prior with the Dow Jones rising 599 points, and then yesterday another big rise. Somewhat of a sell-off into the announcement of the rate hike, and then an immediate recovery and closing back near the highs again at the end of the day. So the markets responded relatively well to the rate hike announcement. We'll talk about this. And are we on the verge of a breakout happening in here for the Dow Jones? And as you guys know, my thought process is crypto's tied to the Dow, tied to the stock market. So I'm going to talk about the things I see going on in here, why what happened yesterday from my angle was good, and how, if you really kind of look at all the narratives that have been going on over the course of the last couple of weeks, it's been interesting, right? We've had the total altcoin market cap down here at the bottom of this parallel channel back at the 702 Fibonacci retracement level, holding itself on top of weekly supports in here. But think about all the news narratives that we've had, right? We've had Federal Reserve interest rate hikes. We've had Russia and Ukraine. We've had executive order. We've had anticipation of, progression in the SEC versus Ripple lawsuit. And it just seems like back to back to back, and the news is kind of just good on all the different things that everybody's been worried about, right? I think really the only big overhanging kind of narrative that's there right now still is really with Russia and Ukraine. And of course, I have absolutely zero way to anticipate what will happen with a geopolitical event in regards to those countries or the impacts throughout the rest of the world. Things could change dramatically if the events in those change either way. If, peace talks happen or if things escalate, who knows, right? I'm sure they know. But as for us, who knows? And then, of course, on Monday, we deep dived over there into the Xrp price chart and still just hovering in here, right? Waiting for that catalyst of the rest of the market to take off. And, I was waiting for it last night and it got released this morning. This morning, the Digital Perspectives YouTube channel released this roundtable discussion they had with Jeremy Hogan and with John Deaton. So if you haven't caught that, it's over there on Digital Perspectives, hosted by himself, Brad Kimes, and Link2. As you guys know, I announced that on my last video that I am now partnered with Link2, who also hosted this event here. And I learned something too. They said they were all members of Link2. And I was like, oh, okay, cool. But either way, I've watched, I've tried to watch as much of this as I could this morning before recording my video, because these guys are all discussing, where we're at within the case for the SEC versus Ripple. What are the other things going on? If you haven't been following kind of the drama over there on Twitter, library credits is another crypto that the SEC has been suing right now. And it's looking more and more apparent that that case is probably an attempt to set precedent in the Ripple case. So that case is set to finish in September. Jeremy Hogan, John Deaton, everybody, they're kind of like, look, if that's the case, if the SEC is trying to use this library credits case as precedent in the Ripple case for rulings, then we'd have to expect that this case would go on until September. However, there is a hiccup that's happening in here, and that's regarding the 63 Hinman emails, right? If you're unfamiliar with the 63 Hinman emails, it's essentially finding out what was in the emails before Hinman wrote his speech giving Ethereum a free pass. There's been a lot of back and forth on it. As we know, the courts have ruled, to the SEC, turn over the emails. They've been going back and forth, fighting it, appealing it, fighting it, appealing it. And if we look at kind of the timeline on how things would have to go, in a best case scenario that the SEC has to turn over all of these Hinman emails, and if the SEC absolutely does not want to turn over those emails, like if they were just forced to, that, from the way courts work and timelines work, that, they could potentially have to be out of appeals, be out of everything, and be absolutely forced to hand these things over by May. And so if you're looking for some type of settlement to happen over there to give XRP some clarity, probably the earliest time frame you could be looking at for settlement, it seems, based on my understanding of these discussions, right? I'm not a lawyer. I'm just kind of listening to them and trying to connect the things that they're saying, that May or June seems like the most likely time if a settlement's going to end up happening. And a lot of it would depend on if those emails have to get turned over. And one of the interesting things that Jeremy Hogan did reiterate was that 95% of these cases settle. So, I'm I love math, right? Math is my jam. 95 is mathematically significant, right? Is 50-50 significantly, is it mathematically significant, or is 53% to 47% odds mathematically significant? Not tremendously, but 95% of cases with the SEC eventually end up settling. So statistically speaking, the odds are favorable that a settlement does come down just based on mathematical odds. And John Deaton presented, here's the timeline for if things ruled out in the best case scenarios where the SEC does have to turn over those emails. And if the SEC absolutely does not want to turn over those emails and wants to do a settlement instead because there's a smoking gun there in those emails, then we'd be looking at May or June. So I thought that was cool. I will probably finish it. I got through probably about 50 minutes or an hour. This thing's an hour and a half long. I will finish it when I get off of this video, because if I kept watching that thing, I would never get my own video out. But either way, that was cool. Check this out over here on Digital Perspective, hosted by Link2. As I also mentioned in the last video, they have become a sponsor of this YouTube channel too. And I'm proud. I'm happy to have them on board. Link2 does give you the ability to invest into private equity in companies prior to them having an IPO or an initial public offering. And they have a lot of companies over here that you can choose from, including Ripple, Uphold, BitPay, and plenty others. And you can check out the link in the description of this video to view what they have available and to see if you can get yourself accredited today. Otherwise, cool to see them involved in the community. Cool to see this whole Attorney Seal, Jeremy Hogan, John Deaton, Digital Asset Investor, Brad Kimes, Linda, Nick, and Ray. I look forward to finishing this video when I'm done with it, when I'm done with my own. Otherwise, lots of good details in there. Check it out over there on the Digital Perspectives channel. The big news that happened yesterday, of course, was the Federal Reserve interest rate hike, highly anticipated for a very long time. I was posting over here on Twitter the night before. Tomorrow is FOMC, big mystery on the rate hike. No one knows. It's like a game. Fed officials sold the top. You think they'll let themselves be the reason for the crash? Doubt it. Congress is still in the markets. They need higher prices before they can ban themselves from owning stocks. Pump it. And I also said, look, the Dow Jones closed plus 599 yesterday, and it's plus 384 in pre-market today. Fed rate hike answers will come today. As humans, we have a tendency to fear the unknown and imagine the worst case scenarios as being the most likely outcome. It's engraved in us. This moment will pass. And sure enough, the opposite thing of what everybody feared, right? Two big fat green candles come over here in the Dow Jones the day before the Fed hike and the day of the Fed hike. But of course, the market was utterly terrified of this moment and happening. And with my wife, I've had to encourage her over time. I bet you could probably imagine that being true. And I try to be as optimistic in life as general, really just because I come from this attitude of remaining in gratitude. But we have to have these talks occasionally. I'll give her credit. She's really significantly better at it now. But anytime presented with a stressful situation, people have a tendency to kind of come up with all these different scenarios on how things can play out. And they'll come up, maybe good scenarios, but mostly they'll think of what's the worst thing that could happen, right? And then you strap onto that worst thing that could happen, and in your mind, you say, that's the most likely thing that's going to happen, right? And I think everybody's kind of guilty of doing that at some point, whether you have a stressful interview coming up and you're trying to imagine all the ways that thing could go wrong, or you have some big event or some big presentation, or you have a doctor's appointment or something, right? You come up with all these worst case scenarios of how things could play out, and that becomes in your mind the most likely thing, and you become real stressed out about it. But what I thought was awesome about the Dow Jones and what's happened here, right? So what we know is we've got what appears to be an ABC correction happening in here. And what also appears to be happening in here is that these waves are of near equal length. And at the same time, for the B leg, it came back up and it hit the 0.702 Fibonacci retracement level right on the button. And here, I'll take that off right there so you can see it for yourself. We've seen this before, right? You got A, B, C, B leg nails it. So for me, I've been looking for a bottoming structure to come in down in here, right? I've pointed to the Bitcoin price chart on how it had a very similar structure before it had its final impulse, because that's what I think's left in the stock market. If it's got one more leg up on it, that's as far as I can take it from a bullish perspective. If it wants to keep on shooting higher, that's fine, but it is very highly likely I'm going to become very bearish on the stock market if we get one more push up. That's how close to the top I think we are in this thing. But I'll put this on a smaller time frame so we can kind of see these and what they look like. But that, before it went on and had its final push up in here, you had an ABC structure, you had a secondary revisit of the lows. And then what you can notice that happened in here, I want you to take just kind of a peek of how these bottoms can play out in here, right in there. Do you see similarities of what's going on in here? Let me shift this to a 15-minute chart so you can get a better idea of exactly what played out right in here and right in here. and that right now we're trying to show our sign of strength and get through a Wyckoff accumulation happening in here. And so my fingers are crossed. We actually do see some big breakout come over here in the stock market either today or tomorrow. And I had shared this with my super followers over there on Twitter yesterday, but I wasn't sharing it live. I was sharing them, and I even prefaced this by saying, hey, look, it doesn't count if you don't post it publicly for everyone to see. But I like the reaction that we saw from the markets today. I was having a conversation with someone while it was happening live and what I was watching for. And again, let me preface this by saying, it doesn't count if you don't post it live. I mean, it's one thing to take screenshots of a private conversation you're having with somebody and then show it and say, see, look, I was right. You have no idea if I've done this, 100 times and I got it wrong the first 99 times. And here I am showing you the one time I got it right? So it doesn't count. But you guys know I've been looking for an ABC to finish wrapping itself up over here on the Dow Jones. And when it comes to picking out smaller time frames and how things can play out, it's really hard to figure those things out. But we were having a discussion over here and I was saying, if the world is a simulation, as I say sometimes, right? Or if there's a puppet master pulling the puppet strings, or if it's God or whatever it is that, causes these things to behave the way that they do, that, the thing I'd be looking for is to have a pullback. And then as the Fed came out and made their announcement on the interest rate hike, we saw the Dow Jones start to fall. So the Dow Jones was up like 500 points. Boom, it started falling and started heading down. Finally, it reaches right down to the target. It only takes like an hour to get back down to this target. Target reached, bring on Jerome Powell presser to send a Lambo candle. And then like magic, right out of the zone, it pops right on out of there. And of course, Tay-Tay takes a bow. But that's because that's what happens in these types of Wyckoff accumulations as we're right here in these levels. So as we could see what has happened here, what would be incredible is to see if the Dow Jones can have its breakout. Look at what happens in here. Does it necessarily mean it's breaking out and going to the moon? No, it does not. But it gets us way off the supports, right? It completes the ABC, it gets the sign of strength and breaks out. Will there be back testing and pulling back that could go on for a couple of weeks afterwards? It sure looks like there probably would be. But I think everybody's pretty sick of being down here at these lows. We've gotten through the Fed presser. We've gotten through the Fed rate hike. It's taken 2 years for that. We haven't had an interest rate hike since 2018. Congratulations. Here we are, 2022. We survived the moment of having one. Let's send this thing. And I know throughout history, just being in crypto for so long, there used to be a big culture of believing that crypto and the stock market was not tied to each other. But over the years, that acceptance has started to grow. And so if you don't know why I do this, why I look at the Dow Jones, it's because the correlation of Bitcoin and the crypto market to strength in the Dow Jones is incredibly correlated. So you see sign of strength over there in the Dow, that typically translates into signs of strength in crypto. And I think we're all ready for that. And we know that the Dow has been in here in this big ABC correction that's been going on all year. And we've been dealing with a correction over here in the crypto market since late last year. Looking optimistic for some exciting price action in the next day or two. And so while we wait on the cryptocurrency market, I think that's the main focus for me right now. And what I'll be watching throughout the rest of today and tomorrow morning is for a sign of strength to show up over here in the stock market to take crypto up with it. Because from an accumulation perspective and Wyckoff perspective, after an ABC correction with waves of near equal length, we're there. And on that note, we survived it, you guys. We made it through the rate hike. They did say that they would be adding a 0.25% interest rate hike on each meeting moving forward for the rest of the year, but that was expected as well. But I think what everybody's kind of relieved of is that, we got through it, right? It's been 4 years since we've had a rate hike. We got through that moment. There's predictability on what to expect, even though we know that sometimes that's not true. But the market's got signal of predictability, and the Fed was true to their word on what they would do. They talked about this for months. They did exactly what they said they were going to do. The market likes that. We could argue all day on whether or not that 0.25% interest rate hike is going to impact inflation or not. That's not the point. That's for another time. But the deal is we finally got through it. It's been 4 years since something like that has happened, and the Fed did exactly what they said they were going to do. So there's some relief. Otherwise, I'm going to go ahead and wrap this thing up. Again, if you're looking for something to pass the day and get some information into your brain, this was a very educational video of what I've seen so far. I'm looking forward to going and finishing it here in a minute with several superstars of the XRP community. Hosted and sponsored, of course, by Link2, which is a sponsor and partner of the Blockchain Backer YouTube channel in this video. But on that note, I'll wrap this thing up. I want to thank you guys so much for watching. If you're looking for something to do, of course, you could check out my website over here, which is bcbacker.com. And this is a course that I've put together where I deep dive into the previous Bitcoin bull runs, the previous altcoin market cycles, tying them all together, showing you how the cryptocurrency market has worked in the past. I structured this course a lot like my YouTube channel, me talking, showing charts, going through stuff. It's not like a PowerPoint presentation. It's very structured, very similar to what my YouTube channel is like with going through charts. I talk about my personal exit plans in here, and I teach you how to set up your own charts and your own indicators so you can do your own charting. The most recent market update in here is back on February 28th, and you can check out all of this educational content over here on bcbacker.com. You can follow me over here on Twitter at bcbacker, and I want to thank you so much for watching my channel. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you could be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.